Most people hear new tax law and tune out, but me, I lean in. Why? Because buried in all that legal jargon is either your next level or your next mistake. What's good, y'all? I'm Toby Garcia, partner at JBS Corp. We're a nationwide tax and business advisory firm rooted in the community, built to help people make smarter moves with their money. I know what this journey looks like firsthand. I'm a Dominican from the Bronx, now based in Massachusetts, and the way I grew up taught me something real. The tax code isn't just rules, it's a roadmap. The one big beautiful bill has officially passed, and whether you're an individual or a business owner, major changes are coming your way. Some of the changes could save you money, others might surprise you. Either way, this is a tax code shaking up things that we haven't seen since 2017. For this video, I'm breaking down some of the most significant provisions, including individual tax cuts and family credits, business write-offs, bonus depreciation, and even a brand new type of retirement account. This is just the first of a whole video series covering key sections in detail, so be sure to subscribe. Let's dive in. But before then, I want to make a point up front. This video isn't about politics, it's about people. This bill includes tools that could help individuals reduce their tax burden and build wealth, but I also know that depending on your income, your filing status, where you live, or even how your business is structured, many provisions will not benefit you. And this is why it's so important to understand what's in the bill and make sure you've got somebody on your corner that can help you interpret it and apply it correctly. We're going to keep things high level in this video because this bill is enormous. And I'll be releasing more videos that break things down section by section in the weeks to come. Let's get into it. Why don't we start with the changes that affect the widest group of people, individual income tax rates. This bill locks in the lower tax rates that were initially introduced in 2017. The top tax bracket stays at 37% instead of jumping back up to 39.6%. The 25% tax bracket is locked in at 22%, and the 15% tax bracket drops down to 12%. These rate deductions or reductions were set to expire at the end of 2025, but they're now permanent. This potentially puts over $2 trillion back in the hands of taxpayers over the next 10 years. Another update for everyday Americans is the standard deduction. Over 90% of people already use it, and this bill locks in the higher standard deduction, set in 2017. That's another $1 trillion in projected savings in the next decade. Now, if you live in a high tax state like New York, California, Jersey, or Massachusetts, you've probably been hit with the SALT cap, which limits how much state and local tax you can deduct from your federal return. That cap was previously stuck at $10,000, but under this new bill, it jumps up to $40,000 through the end of 2029. That's a significant relief for individuals who pay substantial property or income taxes in their state. And here's one that flew under the radar, but is picking up steam. Starting in 2025, you can now deduct up to $10,000 in car loan interest, but only if you're purchasing a new American-made vehicle. It's a temporary deduction, good through 2028, and income limits do apply. You don't even have to itemize to claim it, but again, not everybody qualifies. Now, let's talk about families and seniors. The child tax credit was on track to revert back to $1,000 per child in 2025. This bill not only extends it, but bumps it up to $2,200 per qualifying child. The same income phase-outs do apply, $200,000 for single filers and $400,000 for married couples. It's not the sexy number folks were looking for, but I suppose it's something. For folks over 65, there's also an increase in senior tax deduction. The old amount was $2,000 per person, $3,200 for married folks, but this bill more than doubles it to about $6,000 per qualifying individual. There's still some income limits, but it's a meaningful bump that helps offset the fact that this bill did not eliminate taxes on Social Security income as some hoped. So let's get into wage income, because there's been a lot of hype about the no taxes on overtime or tips. Now, it's not completely tax-free. What this bill actually does is allows a new deduction specifically for overtime wages, up to $12,500 for single filers and up to $25,000 for married couples. That deduction reduces your taxable income, which lowers your tax bill overall. It phases out at $150,000 for single filers and $300,000 for joint filers. There's also a similar provision for tip income. Workers in occupations that customarily receive tips like hospitality, personal care, transportation, and even some retail can deduct up to $25,000 in qualified tip income. The same income limits do apply. Now, other service professionals, such as lawyers, doctors, accountants, don't qualify for this because the law explicitly excludes service-based businesses where the skill or reputation of the individual is the primary reason people pay for the service in the first place. Now, onto retirement, where things are quietly shifting in a big way. The bill introduces something brand new, the Trump account. Beginning in 2025, any child born that year or after will automatically receive a government-backed, pre-funded retirement account. It's aimed at giving kids a head start towards building wealth, but it also hints at a deeper pivot toward federally controlled retirement systems. And depending on how it's rolled out, it might even be a first step towards addressing the long-term challenges facing Social Security. At the same time, the bill targets backdoor Roth IRAs, which many high-income earners have used to build tax-free retirement savings. Under the new law, post-tax contributions to traditional IRAs may be limited or even disallowed in some cases. Effectively, it eliminates one of the most common backdoor Roth strategies. So if you're currently using that approach, it might be time to talk to your advisor. Let's shift gears to business. One of the key benefits for business owners in this bill is the permanent extension of the qualified business income deduction, also known as the QBI deduction. This allows qualifying business owners to deduct 20% of their income directly from the taxable income. For example, if you net $150,000 through your DBA, LLC, S Corp, you could get a $30,000 deduction without spending a dime. Please be aware that not all businesses qualify. Before this bill passed, QBI was set to expire in 2025. Now it's here to stay, and the income thresholds to qualify just got bumped up by $25,000 to $50,000 depending on your filing status. That means more high-income earners may qualify. Some folks may even be able to restructure their business to qualify under the new rules, something you should consult with your trusted advisor. Next, we've got bonus depreciation. In 2025, it was intended to drop to 40%, but this bill reinstates it to 100% for all qualified purchases made after January 19, 2025. That means that if your business purchases machinery, vehicles, tools, or equipment, you can write off the full amount immediately. Not over 5 years, not over 7 years, etc. Right now, it's a tool businesses can use to grow while reducing their tax burden. As always, please ensure that you conduct tax planning to determine if this makes sense for your business. It doesn't stop there. The bill also reinstates 100% expensing for research and development. So if your business is improving a process, developing a new product, or building out the latest software, you get the full deduction upfront, no more amortizing R&D costs over multiple years. And finally, for investors, the bill extends the enhances to opportunity zone programs. This lets you defer or reduce capital gains taxes when you reinvest those gains into qualifying projects in underserved communities. It's a creative way to build wealth while also giving back. Here's the bottom line. This bill is huge, but it's not bigger than your ability to adjust, learn, and execute. This is why tax education isn't optional anymore. It's a strategy. So if this helped you, hit that like button, drop a comment or question, and share this with someone who's trying to stay ready instead of getting caught off guard. Also, this year, JBS celebrates 20 years of serving the community. We've put together something big this fall for business owners in Massachusetts and New Hampshire. If you're building something, growing something, or ready to take that next bold step, this is for you. Stay tuned, it's gonna be special. Subscribe now because this is just the start of our One Big Beautiful Bill series and other tax and accounting content and information. We're gonna walk you through everything that could impact your money, your mindset, and your next move.